Hey everybody, good morning. It's the 12th of May 2022. It's about 8:22 in the morning. I'm going to do something a little different than I usually do. I want to talk a little bit about a trade that we took in the Discord yesterday where we were able to, if you mix the two trades together, we made over 100% on that trade. And I want to explain how and why I take certain options positions. So before I get into any of this, you'll know this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. I'm just giving my opinion, and in this particular case, this is more of an educational video than anything else. So let's go ahead and move on into the chart. So the first thing that I want to point out is we've been trading Apple for a while on the Discord. We've been pretty bearish on the asset. I want to talk a little bit about some important things to do before you actually get into a trade, and that's to take a look at a chart with no indicator on it. Of course, I do have some bias to our Wave Master indicator, but fact of the matter is, before you take any trade, it's really important to take a look at the chart as a whole with nothing on it. And what I tend to do is I tend to zoom out and kind of take a look at some things. I want to point out just a couple things that I observed on Apple before yesterday and kind of going into this week. The first thing I want to point out is the fact that we had significant areas of resistance here, and eventually we turned that into support right here. That was a pretty important level based on the resistance that we ran into the first time we hit that level. That's at 150, a really nice psychological level as well. So, you would imagine that once we move into that level, that the chances of us breaking through that level are pretty high. The chances of breaking through are pretty high. And there's a couple other things I'm going to talk about here in just a minute that you have to take into account when you're looking at a trade like this, especially if you're looking to kind of short one of the generals here. And I consider Apple to be one of the S&P generals because the weight is so high on the S&P 500. When you take into account Apple, I think it's something like 6 or greater than 6% of the S&P is weighted by Apple. So naturally, when the S&P doesn't look so hot, these big assets are usually one of the last to sell off. And that's what we're seeing right now. Not that I want to get into the weeds on some of the other things, but if you take a look at some of the other stocks, look at Carvana, that was one of the early ones to sell off, and it sold off deep. So getting back to Apple here, we had that support there at 150. We also had some important support and resistance, right? A key level here at about 153, and another one up here at about 156, 157. So those levels are also important for what we're going to be talking about on this video today. So I always zoom out and find those key levels. If you're interested in the levels to the downside, well, you can see right here I've got a level at about 144.42. I've got another level here at about 138.62, and then one all the way down here at 137. We'll call it 137 even. Again, you can take a look right over here. We've got these all based off of prior resistance levels. And, you can see it time and time again. These levels are going to be important moving forward as we kind of sell into those levels. Not saying that we're going to go all the way down to 137, but I certainly think it's a possibility. A lot of people were talking about Apple all the way up here at 177, 180, 182, and not thinking it was ever going to be all the way back down here at 143 like it is right now in pre-market. But alas, here we are. So what do I use to take a look at options trades? All right, well, this is on the 4-hour time frame. That's where I'm getting some of these levels. Let me just go ahead and go out into the 1-minute time frame, because this is important moving into the day, yesterday rather. So 2 days ago, what we saw is a lot of price movement, up and down and up and down and up and down, kind of sold off into the end of the day. This was on the 9th, right? Okay, so excuse me. So this was on the 9th. And right here at this key level at 153, we were just kind of moving around, not making any big moves, not making any big decisions. Volume was pretty low most of the day, but we were just kind of bouncing right here at this level. The next day, we actually gapped up, right? It was a pretty big gap up. We came down, we filled that gap, but we found support right here at the 153 level. Then we moved up and found resistance at the 156.76 level. So these are the two levels, and we respected it pretty well. This was on the 10th, okay? So this was Monday, this was Tuesday, and now we have yesterday, okay? So yesterday, what ended up happening? I'm going to kind of try and kind of hide some things that I've already got pre-planned in here. We kind of broke down below the 153, and then again, we were kind of clustering here. But look at the volume. The volume was just, there really wasn't anything significant there. Nothing significant on the volume as we were kind of, moving down below the 153 level. Volume was still kind of low, but then you saw volume start to pick up just a little bit. But then what did we see right here? This is where I said that we needed to be buying the Apple 148 puts. I'm not going to talk into how I pick and choose which options that I go with, but usually I take a look for around the 30 delta. So always look for like a 30 delta. I talk about that quite a bit. Always look for the 30 delta. It's usually the best bet. But look at the significant volume that we had here on this candle. So this candle right here, let me see if I can mark that off, and it's not going to let me do that. Okay. Well, anyway, so right here on this candle, we moved all the way down. That's why it wasn't working. There, right there. That's the candle. That's what I was trying to do. That's the candle I'm looking for. We had a significantly higher volume going down into the 150 level. So I had it at 150.18, and we sold into that level, and that's the volume that I was looking for, because you could see, kind of moving into it, we had increasing volume, a little bit higher volume back here, but then it got sold into with even more volume. So volume is what you need for the asset to move. Volume is what you need for implied volatility to increase, and that's going to kind of juice your premiums, and that's what we were looking for. So we got the 148 put at a really decent price. We got it at about $135. And then we had, the continued sell-off. And one thing that made me more confident in this trade is the fact that the next candle was more volume, and the next candle was more volume. And certainly volume kind of tapered off a little bit, but it continued to move in my direction. And so, we saw this continued move down, and then we started to see a little bit of sideways movement. That's why I'm like, all right, we need to take profit. So we took profit, and we went from about $135 at that point, and it was down to, or actually up rather, we got Apple up to $2, so 200, so 135 to 200. So that was $75 per contract that you had a movement to the downside. So it's roughly 50%. And then we had another move down. Again, it continued to move down. We saw a little bit of a higher uptick in volume, but then we saw a pretty big green candle. And, it's relative. It's all relative. We're still below the 150 level, so I'm still confident that Apple is going to continue moving down. But when you're day trading options, it's really important to take profit along the way, because it does not take much for that volatility, that implied volatility, that the premium juice, for it to dry up. So it's always important to take profit along the way. When you see, and I refer to this all the time, when you see the move happen, take that profit, capture it, and then kind of wait for the next trade. And that's exactly what happened here. We saw a little bit of support, and then what happened? We broke down, and then we had more volume. So we had more volume here, so we rolled into the 145s. And we saw a big move down, so we got the 145 at $1.30, so 130. Then we were able to take profit down here at 180. Now, certainly we saw a little bit of a move up here, but we were still able to capture another $55 per contract for roughly the same price that we had before. We started with 135, then we rolled into this one for 130, and again, we pulled in decent profit on this move down, about 50%. And on this move down, we went from 130 to 185. So again, we were able to pull an additional $55 on the $130 investment. and we were able to capture that. And eventually, at the end of the day, we were able to exit the remaining position here at break even. So even if you didn't take profit when I was kind of saying, hey, you should be taking profit here, you were still able to get out at break even because, even though we kind of moved sideways and we actually started moving up a little bit, it was still enough juice, even though these expired on Friday or this coming Friday, there was still enough juice in that IV that allowed you to kind of exit at break even. Um, just one thing that I want to note, there was a sign of strength here, and it was on this candle right here. So that volume candle is red, but that's just because the candle closed red. There was some indecision here, and this ended up being a little bit of a bottom, and then it started trending up, which is why I got out basically at break even. And then we are still in longer term positions, but for this short term position, this trade lasted from from right here at about 12:56, and we got out completely in about an hour 49 minutes. So you're talking about almost 2 hours of time. We were able to capture roughly 100% overall, maybe slightly less. Sorry if I'm a little misleading on this. I did a rough calculation here, but if you take the two trades together, we were still able to capture close to 100% on that trade. And that's all I really wanted to do. I wanted to talk about the importance of key levels, right? So when you're day trading options, the things that you need to pay attention to the most, the first thing is key levels. Key levels are king. That's the thing that you have to pay attention to the most when you're trading. The next, you're going to be looking for volume. Look for volume when you're day trading options. And then, last but not least, what you're going to be looking for is, any indicators. So indicators when you're day trading options should be one of the last things that you pay attention to. Certainly key levels are the most important because, again, what we saw up here, we saw, and this was yesterday, we saw key levels being respected, right? We saw this floor here, 153, being respected, and the ceiling at 157 being respected. And then when you break down below that, you look for the next key level and look to see what the reaction is at that next key level. Once we broke that 153 and we started trending down, it looked bearish. But then we got the volume that we needed to push through that key level and continue going. Because, you need gas in the tank in order for something to continue to move. And that's exactly what happened here. We saw that gas in the tank, we saw the volume pushing it down, and that continued. So, we take the trade on the break of the level, take profit on any sign of strength if you're playing to the downside. Signs of strength, you have to get out of that trade and take that profit. And then, once you see a little bit of a structure and it starts to break, then, you take that trade again on the volume, right? You look for the volume, and when the volume is there, well, then you can, you can ride that down a little bit more. So that's all I wanted to talk about today on this video. Just talking about, why I took the Apple trade, how I identified the trade, and if finding these things, just finding these trades isn't your thing, you can always find information on BitDoctor.org if you want access to our trading room where I share trades just like this. Not every day, but almost every day. We find trades like this quite a bit. They're not always winners, right? Nothing in trading is 100%. Nobody has a 100% win rate, so I don't want to throw anything out there to say that every trade that I suggest is going to make money, because that's not true. But we do our best to make sure that we manage our risk and we let the winners run. If it comes down to it. But of course, if you need access to our Discord, you can find all the information on BitDoctor.org. If you need access to our indicator, which is what we use for equity swings and for crypto trades, you can also find that on our website as well. And last but not least, wherever you are in the world, hope you're having a good day, good night, good evening, happy trading, everyone, and we'll see you at the opening bell. Take care.